Welcome to Bitcoin Basics, an overview of Bitcoin. My name is Daniel Ameli. I have an economics degree from NYU, an MBA from Hult International Business School. I've worked on automated trading systems, and I've spoken at Bitcoin conferences, given classes on Bitcoin, and consulted for individuals and businesses. I also co-host a monthly technical review of improvements and issues in the Bitcoin space called Miami BitDevs. The first thing you'll notice about Bitcoin is that it has a price that goes up and down. But that's Bitcoin's least unique property. What's interesting about Bitcoin is what makes it unique, right? Everything has a price that goes up and down, whether it's gasoline or houses or stocks or bonds. But Bitcoin has a number of really special properties, and I'm going to get into them in this presentation. However, price does capture people's imagination. It gets people's attention. More people hear about Bitcoin when the price is at one of these local high points, as you'll see in this chart here. There are previous cycles, right, where the price of Bitcoin went up and then went way down. And it's actually hard to see them on this long-term graph. If you look at this graph here, it shows prices back to 2012, and it looks like it was flat for the first few years. But actually, I'll show you on the log chart, it's not. Believe it or not, this is the same chart, simply with the y-axis showing a logarithmic scale instead of a linear scale. And this lets us see that, contrary to the impression that you would get from the previous chart, the first few years of Bitcoin's history were not at all flat. In fact, they were quite turbulent with bubbles and crashes and peaks and valleys, similar to what we're seeing today. So Bitcoin is the original and most important cryptocurrency. A cryptocurrency is a digital currency that uses cryptography to verify the ownership and transactions. And this is a type of digital currency, right? So there can be digital currencies that are stored electronically instead of in a physical format. And digital currency is just one type of currency. Currency is just the circulating money used as a means of exchange, and that can include physical notes and other things as well. Bitcoin is hard to understand because it's more interdisciplinary than really anything else. It's at the intersection of so many subjects, many of which the average person is not that familiar with, right? It's at the intersection of information security, cryptography, economics, disruptive innovation, game theory, computer science, and peer-to-peer networking. So we'll try to at least give you as good an overview as we can in a short amount of time, but bear in mind that it's easier to understand Bitcoin the more you understand any of these topics, but learning about Bitcoin is actually a gateway to learning about these topics as well. So what is Bitcoin? It's a good question. It's pretty much the first question people ask, and it does take it some time to actually try to answer this. Bitcoin is a cryptocurrency started in 2009, so quite some time ago now, by someone who identified as Satoshi Nakamoto. We don't know who that is, and he left the project in 2011. Maybe we'll never know. Bitcoin with a capital B can refer to the whole network, whereas Bitcoin with a lowercase b is often used to refer to the units of the currency. Sometimes you'll see that abbreviated as BTC or XBT. Bitcoin is decentralized, so there's no company, government, or person that's in charge, right? Bitcoin belongs to all of us, or none of us, or whoever wants to use it, essentially. And that's a bit different than a lot of things people are familiar with. There are many businesses, however, that are built on Bitcoin or in the Bitcoin space, or use Bitcoin in some way. But it's important to remember that they're not authoritative, right? They're just simply choosing to use Bitcoin in their own way. The price of Bitcoin fluctuates 24/7, 365, which is actually quite different than many other financial markets where they close during certain hours or on weekends or holidays. Bitcoins are a purely digital bearer asset, right? Again, they're not a physical metal coin, right? You can't bite them. They exist in the computer database known as the Bitcoin blockchain. And by bearer asset, that means that possession of it is equivalent to ownership. if you have Bitcoin, right, you can think of it in some ways like cash, that if you give it to somebody, then you cannot just initialize a chargeback. You can't reverse the transaction. You can only ask the person to give it back to you, right? Bitcoins can be divided into pieces. So just like a dollar can be divided into 100 cents or pennies, right? One Bitcoin is divisible into 100 million pieces called Satoshis or Sats, right? In honor of the still unknown founder, Satoshi Nakamoto. The advantage to this, and again, this is all done automatically by your software that you'll be using, is that you can send small amounts in terms of value of Bitcoin. So even if Bitcoin goes up in price, as of the time of this recording, it is at $28,000. You can still send $10 worth of Bitcoin to somebody if you want to. Bitcoin is borderless and global, right? It's available to anyone in the world who wants to use it. It does require some kind of technology, whether that's a cellular phone or a computer of some kind, in some way to connect to the broader network. But it's still much more inclusive than almost any other system. So it's helping to bank the unbanked in certain parts of the world. Bitcoin is permissionless. That means you can just use it. You don't have to ask anybody. There's no, age restriction, no concern about, what country you're in or so on, or what your ethnicity or nationality is, and so on. And Bitcoin is not trademarked. Again, since it's decentralized, there's no one that really could own the real trademark to it. So people can create their own Bitcoin energy drink if they want to, right? But again, not officially endorsed by Bitcoin. Seriously, what's Bitcoin, right? And again, this question takes more time to answer, and sometimes the answers only lead to more questions. So Bitcoin is an open source project. That means that anyone can see all the code that underlies it and even edit or contribute to it. There are only 21 million Bitcoins that can ever exist. So there is a fixed total amount of Bitcoin, and that can't be changed, right? As of this recording, there are 19 million Bitcoins that have entered circulation, and there's only 2 million Bitcoins that will slowly be produced over the next 100 years or so. Every 4 years, Bitcoin production is reduced by half, right? And it's an event called the halving, or the halvening if you prefer. So Bitcoins are produced by mining. It's meant to be analogous to gold mining, where specialized computers are verifying transactions in the hopes of solving the next block. So mining was initially done by hobbyists. Anybody can do it, right? But now most mining is done on an industrial scale in large warehouses where they can get the least expensive electricity to use. Mining, also known as proof of work, is necessary for the security of the network. Blocks of transactions are forming the Bitcoin blockchain, which is always growing, and I'll talk more about that later. And you can actually see the Bitcoin code and even contribute it to yourself on the website GitHub, where it's maintained by volunteers. So why do we want Bitcoin? Why would we want something with these properties, right? It's because this gives us resistance to censorship, to inflation, resistance to confiscation. Bitcoin has these unique properties, and that's what makes it so incredibly useful for people who are facing these problems or are concerned they might be facing these problems. But for people who aren't, some people simply see it as an investment in a non-correlated asset. Bitcoin simply moves to the beat of its own drummer, and it's not necessarily correlated, especially over longer timescales, with stocks, bonds, precious metals, or other assets. Bitcoin is also useful for global remittances, for purchases, and for earning. It turns out that between certain pairs of countries, it is fairly difficult or expensive to move money, and Bitcoin simply works. If you can send an email to somebody, you can send a Bitcoin. It also has a nice property of no chargebacks, right? The payments by default are irreversible, which allows people to know that if they got paid in Bitcoin, that the money is now really theirs, and they don't have to worry about some kind of issue later on. However, Bitcoin also does support a form of escrow where you can have the payment essentially held in this escrow until some measure of quality or some product has been confirmed as being delivered. Bitcoin is also programmable, which means that you can have a computer program, an AI, send or receive or manage Bitcoin. You can automate all sorts of payments that would be difficult with a traditional financial system. So there's the saying, they say, well, Bitcoin can bank the unbanked, where there's a lot of people in the world, believe it or not, who have smartphones but don't have access to bank accounts. And Bitcoin gives them some access to financial services without having to require a bank. But there are also people who say, well, maybe Bitcoin is unbanking the bank. There are people who have bank accounts and want to get away from the traditional financial system and use Bitcoin. Bitcoin is also useful for moving value across time and space. Right? It's not just about sending it to the other side of the world, it's about sending value to perhaps yourself in 10, 20 years because of that property being resistant to inflation, because you know that there's a limited supply that can be produced, then your wealth in that is not as easily diluted as long as people continue to use and want Bitcoin in the future. Also nice is that Bitcoin doesn't have the bailouts, the bail-ins, corralitos, or devaluations. There's been all these cases in so many countries and continues to be around the world where people are forced to pay for other people's irresponsible behavior. They're not able to get their money out of the bank, or their currency is devalued, or forcibly converted into a different currency at an unfavorable exchange rate. And in fact, the Genesis block of Bitcoin, when Bitcoin first started in January 2009, it actually referenced a headline that day in the Times of London, Chancellor on brink of second bailout for banks. If you look at Satoshi's writing, the genesis of Bitcoin was partly in response to the frustrations with the banking system. Bitcoin transactions. So there's something called a block explorer, which makes it easier to view blocks, transactions, and addresses on the Bitcoin blockchain. So you can use one like blockstream.info, or you can even run your own. There are multiple formats for Bitcoin addresses, and at least the current ones all start with 1, 3, or BC1. A Bitcoin address or a private key can be represented as a scannable QR code. And a Bitcoin transaction can take many forms. It can be a payment, it could be payments to a lot of people, it could be payments from multiple parties, or from multiple parties to multiple parties, right? And there's special types of Bitcoin transactions as well. So how much does the Bitcoin transaction cost? Bitcoin transactions are based on the size of the transaction in bytes, right? The amount of data and the transaction takes up, not the amount of Bitcoin transferred. So the fees can vary based on the number of pending transactions and their fee rates. The wallets that you'll be using, right, the software, usually estimates an appropriate fee for you. And the fees go to the miners who are including that transaction in a block. So that means that sending Bitcoin can sometimes be, a few pennies in fees, but in certain cases can be multiple dollars to send it. There, however, is something called the Bitcoin Lightning Network, which is also useful for small, quick, and cheap payments. It's a layer on top of Bitcoin that allows you to move Bitcoins in a different way. So the nice thing about Lightning is that it typically has fees of a few pennies or sometimes much less, and it doesn't increase suddenly the way that sometimes Bitcoin does when a lot of people are using the network at the same time. This is a look at transactions being accumulated in what's called a mempool and then being mined. This is from mempool.space, a great website with nice visualizations. And the different colors represent fee rates that people are paying. So as transactions accumulate that people would like to have processed, the miners typically mine the highest value ones first, and then it allows them to work down that backlog. And then once the higher value ones are mined, then they'll mine lower value ones, and then finally working down to the lowest ones that are typically available for mining. Now, what's a blockchain, right? This has become this crazy buzzword now, but ultimately it's just a data structure. It's just a specific type of database. Or, as some people might put it, a blockchain is a series of blocks. So you have each block and it contains transactions and timestamps, and it's linked to the previous blocks via these hashes. They're mathematical functions. I like to think of the blocks almost, instead of just being in order, as almost being like these nesting dolls, where each block gets encapsulated by a larger block. So they get buried, basically, in the accumulating history as it grows. Each new block of transactions adds to the history and cannot be retroactively changed. If you talk to people who are really into Bitcoin, they might tell you that they run a node or that you should run a node. What's a node, right? A node is a computer connected to the internet that's running Bitcoin Core, this piece of software, or an alternative piece of software that's also compatible with it, which downloads, verifies, and propagates the Bitcoin blockchain. Who can do this? Anyone, right? Anyone can run a node, but you don't have to. The nice thing about running a node is that it lets you verify the ownership of your Bitcoins, payments to you in Bitcoin, and lets you most directly view the state of the network instead of asking someone else. There's a saying in Bitcoin, don't trust, verify. And the nice thing about Bitcoin is Bitcoin really lets you do that. Bitcoin wallets are software that lets you store, track, manage, and send Bitcoins. Right? It's basically software that runs on your mobile device or desktop, or it can be on a dedicated hardware device as well. You have many choices of features or design, and some of the common wallets can include Bitcoin Core itself, but also popular now are Sparrow and Moon Wallet. Bitcoin exchanges are websites or companies or apps that facilitate buying, selling, or trading Bitcoin. It just helps match the buyers and the sellers. And what exchanges you might be using depends on your region, the amount of Bitcoin you're trading, and what other features you need. Sometimes exchanges will require an ID or proof of address. It's not part of the Bitcoin system. It's based on the regulations in the area that the exchange is based. But Bitcoins don't have to be acquired from exchanges. It's just the easiest way, right? They can also be mined, purchased from Bitcoin ATMs, or received in exchange for goods and services, right? Because fundamentally, Bitcoin is money. You don't have to buy money, you can earn money. There's a number of different common exchanges, and you should do your own research as to what exchanges might be helpful for you. Mining, right? It sounds like, oh my goodness, wow, somebody must have a pickaxe and be trying to dig something out of the ground. But it's meant just to be an analogy to gold mining, right? You have the initial distribution problem. If you created a new currency, Bitcoin, how do you actually get it to people broadly instead of having it too concentrated by the founders? So similarly to gold, right? Gold is already all over the world, but people have to go and spend some effort to dig it up. The idea with mining is that everybody who is interested in looking for Bitcoin can contribute their computing power to verifying other people's transactions, and then they're rewarded with Bitcoin for doing so. So not only did you solve the initial distribution problem, you also incentivize people all over the world to secure the network in a decentralized way. They're getting paid in the currency itself, while validating everyone else's transactions and keeping track of the state of the network. There's something called the labor theory of value, which is simply not true. It suggests that just because you put work into something, it has value. But that's not the case, right? Only certain kinds of work actually create things that are valuable. So Bitcoins don't have value because they're hard to make. Bitcoins have value because they're useful. And what protects that value is the fact that you can't just generate an arbitrary and unlimited amount of Bitcoin. So anyone can mine now, which requires an ASIC. Essentially, it's a machine that is dedicated to Bitcoin mining. But again, most mining is at an industrial scale. So while it can be nice to have one or two at home of the ASICs, it's not necessarily a profitable or advisable endeavor. The difficulty is what keeps the regulation of Bitcoin, of the issuance of Bitcoin regular. It regulates the issuance of Bitcoin. So the difficulty can go up or down based on the amount of people that are mining and their mining power cumulatively, and it typically increases over time. Again, every 4 years there's something called the halving, in which case the amount of Bitcoin being issued is cut in half. So Bitcoin uses a hashing algorithm that was already developed and well tested called SHA-256. And you measure the mining power of the network as well as your own individual miner in something called hashes per second. So a valid hash has to be within a certain range for the block to be added to the blockchain. Anonymity versus pseudonymity. Anonymous means there isn't a name, but pseudonymous means it's a fake name or alias. So Bitcoin is pseudonymous just like Satoshi was. We know the name, Satoshi, but we don't necessarily have it linked to a real-world identity. It's only linked to the other writings of Satoshi. So sometimes people think that Bitcoin is untraceable, and that's simply not true. Bitcoin transactions are public and permanent. So it's important to understand the implications of that. It's possible to get different degrees of privacy in Bitcoin, but it requires intentional effort and an understanding of how privacy in Bitcoin works. So Bitcoin is disinflationary, which means that Bitcoin does have monetary inflation. It's just that the amount of it goes down over time. So in this chart here, you can see the Bitcoin supply in orange that's increasing, but the rate at which it's increasing slows down until it reaches that terminal value of 21 million, far in the future. Whereas the issuance rate, the blue line, is constantly dropping in half every 4 years. So that is the one that's stair-stepping down. Right now, the issuance of Bitcoin on an annual basis is less than 2%, and by the next halving, it will be less than 1%. Friedrich Hayek said, "I don't believe we shall ever have good money again before we take the thing out of the hands of the government. That is, we can't take them violently out of the hands of the government. All we can do is by some sly roundabout way introduce something they can't stop." So what is money? It's something that people spend a lot of time thinking about how to get it, but not a lot of time thinking about what it is and where it comes from and how much of it there is. So money has three functions: a store of value, that you can save what you've been paid into the future; means of exchange, so that you can actually use it to buy and sell goods and services; and a unit of account, a way of measuring value so that you can actually come up with prices for different things. So money is not something that's valuable in and of itself, right? The value is in people trading across time and space, and money is just a tool that lets them do that. So there's been commodity money, whether that's gold coins or shells or beads. There's commodity-backed money, where perhaps there's gold in a vault somewhere and people are trading pieces of paper for it. There's fiat money, where you just simply have pieces of paper that are issued by the government, and it has the value that the government insists it does until the government, unless the government were to lose credibility. And you also have a global reserve currency, a currency that's used by countries all over the world for international trade, as well as for backing up the value of their own fiat currency. Currently, the global reserve currency is the US dollar. There are ideal properties of money. You want your money to have certain properties, and that makes it better money the more of these properties it has. So you want money that's durable, right? In order for it to be a store of value, you want money that doesn't degrade or corrode or dissipate, You wouldn't want to use fresh fish as your money. You want something that's scarce. It's hard to use sand or water as money. Even though people want it, there's just simply too much. But it also needs to be available, right? If you use something that was incredibly rare and no one could get their hands on it, it wouldn't work very well as money. You also want something that's divisible, right? You can't use rare artwork as money because you can't just cut off a piece of a valuable painting in order to make a smaller payment. Also recognizable. You want people to be able to quickly identify the actual market value of it instead of having to assess it or weigh it or auction it. Fungible as well. You want each unit of the currency to be considered the same as any other unit of the currency. And portable. You want to be able to carry it or send it easily, especially across long distances. You also want something that's non-counterfeitable, or at least very difficult to counterfeit, right? Because you don't want people to confuse it with forgeries, because the forgeries end up effectively inflating the supply. And ideally, you want something that's irreversible, where the payments cannot be reversed by the sending party, because you can build a reversible system on top of that, and you want to have both. And when the payments are irreversible, then you know that the money you have is actually truly yours. You also want something that's acceptable in that a large number of people take it in exchange for their goods and services. And you want something that's decentralized, where no central group has control. Decentralized is not something that's good in and of itself. Decentralized is good because it helps protect these other properties. And if you look at here, Bitcoin, the US dollar, and gold score differently on these. But overall, they actually do score reasonably well, which is why, again, that Bitcoin is being more adopted as money. Gold has been used as money in different forms over thousands of years, and the US dollar is currently the world's reserve currency. So I talked before about dedicated devices for storing Bitcoin, or rather storing the private keys of Bitcoin. These are often called hardware wallets, right? So they're a little bit of tech that's built to do one specific thing well. And there's all sorts of companies that are making these, many different devices. You can choose whatever form factor or price you're comfortable with. But again, the bottom line is normal computers are not really that secure. And when you're thinking about something like the keys, which are basically money themselves, you can't let anyone else get your keys, right? So the nice thing about these devices is that you can generate the private key on the device to your Bitcoin, and they don't leave the device, even when you're sending Bitcoin. So it's just the easiest way for you to get a high level of security. Some of these are standalone, some of them will connect to your computer or your phone, and some of them support multiple cryptocurrencies, or some of them support only Bitcoin. Something called seed words, or a seed phrase. This can be 12 or 24 random English words, and it's just a way of representing this private key. Ultimately, this private key is what allows you to access all your Bitcoin, and it's useful for you to have a backup of it. Because you think, well, if I'm using one of these hardware devices, what happens if I lose it or it gets destroyed? That's where you would want to make sure you have already made a backup, and then with those backup words, you can then restore access to all your Bitcoin. So there's something called hierarchical deterministic wallets, or HD wallets, and that allows you to create all these addresses from this one, private key, or from these seed words. But it's important to realize that the seed words are enough for the funds to be moved even without the hardware device, right? Just like if you had a backup key to your house, that backup key is just as valid as the original. These can be just written on paper, but there are also steel devices where you can have something that's more durable in the event of fire and so on. The important thing is that you never want to put the seed words or the private key on a computer or any general purpose computer of any form. The Lightning Network is a layer 2 of Bitcoin. It's another way to send Bitcoin or Satoshis from person to person. While I won't get into the technical details, the idea is that you have these fully funded payment channels, and then you can send your payment through several other hops to where it's ultimately going. The nice thing about it is payments are instantaneous, fees are very, very low, and it's more scalable than Bitcoin on chain or at the layer one. There's a lot of ongoing development, and it's been just getting so much better over the last few years. And there's metrics you can look at that shows about 5,000 Bitcoin are now locked into these payment channels for people to use for these fast and even streaming payments. There's an app called Fountain where you can send or receive sats in a streaming format as you listen to a podcast, for example. But one of the trade-offs, though, is that you need to be online in some way in order to receive payments on the Lightning Network, and it doesn't work as well for very large payments. Whereas, on-chain works actually better for larger payments than it does for very small payments. There are places that have the point of sale systems where you can pay with Lightning. And in fact, in the country of El Salvador, that's adopted Bitcoin as an additional official currency. Many places allow you to pay easily with Lightning from your mobile phone just by scanning a QR code or by tapping and paying via NFC. It's important to realize that with every opportunity, there are risks, right? There are risks to the Bitcoin network itself, as well as risks to individuals if they are storing private keys improperly or making other mistakes. For example, cell phones are vulnerable to SIM jacking, where the phone number can be transferred to an attacker's phone in order for them to get into exchange accounts or in some other way try to steal Bitcoins or other sensitive information from individuals. You also have to consider the tax implications of buying and selling or trading Bitcoin in what your jurisdiction is. And also bear in mind that there are plenty of people who are saying absurd things like, oh, hey, send me 1 Bitcoin and I'll send you 2. That's not a legitimate business opportunity there. They just want to have your Bitcoin. So you always need to be aware of different potential threats in the space. But ultimately, the bottom line is hold your Bitcoin securely yourself. So where's this going? Well, there's a remaining challenge of onboarding and educating billions of people. There's the challenge of getting companies and large investors to get involved and to realize how this can help them. There are different financial products that have launched and still a few more left to do that would actually be quite helpful, as well as integrating people's other assets and asset management platforms in with Bitcoin. There's potential benefits from future regulatory clarity, which would make it clear in what categories Bitcoin falls into in terms of the treatment by regulatory agencies. And there's also, of course, plenty of code improvements left. The bug fixes, optimizations, so making things more efficient, and in some cases adding new features as well. And there's a lot more work to be done with scalability, privacy, as well as hedging tools. So that means additional layers, certain upgrades, which again I won't go into, that are happening or have happened or will come in the future. But also simply just the track record, right? Bitcoin at this point has been around for 14 years, which is pretty good. But every day that Bitcoin is still functioning gives more confidence in the system. There's something called the Lindy effect, where the longer something has been around, the longer you expect it to last. And Bitcoin continues to build on its track record. But ultimately, right, Bitcoin will become used behind the scenes. As I say, ubiquitous, right? When you think about how often do you use databases, well, you might be using them many times a day. You just don't think, oh, I'm using a database now. Just like so many things now rely on the internet, and people don't think I'm going to go use the internet itself. So there are many existing remittance channels that can use Bitcoin behind the scenes in order to more seamlessly even move a fiat currency into another fiat currency or into another location. So in the same way, Bitcoin could become something that is less exciting but more useful and behind the scenes. As William Gibson said, the future is already here, it's just not evenly distributed.